Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today I have the pleasure of interviewing a guest that's been on the show multiple times, Alasdair MacLeod. How are you doing today?
Fine. Thank you for having me back, Daryl.
Yes, I want to start by getting your reaction. There was recent headline news about Christine Lagarde stepping down from her role as president of the ECB, the European Central Bank, or I guess she's planning an early exit before Emmanuel Macron takes the president role. Just current, you have any reactions to that? What kind of legacy does she leave?
Well, it's a difficult one to answer because she was appointed as a safe pair of hands, as it were. And broadly, in the ECB's context, I think that she has fulfilled that role. Now, this is not to say I agree with her policies. I don't think she really understands economics, in fact. She certainly doesn't understand money and credit. She has not been very well advised. I mean, I think this is the point that, the president of the ECB is someone who is advised, if you like, by his or her fellow directors, executives, and so on. I don't think she's been very well advised. So I have some sympathy, if you like. I don't throw brickbats at her like some people do. She's a very ambitious lady. And when I saw the announcement this morning, I thought, oh, she wants to stand as president of France. And she's clearing the decks for that. Now, I think that's probably a stretch too far for her, if that is actually what she's intending to do.
Yeah.
And I think it'll be interesting to see who replaces her, because there's quite a lot of politics involved in this, and particularly politics between Germany and France, the Banque de France and the Bundesbank. And I think that the Germans might argue it's their turn.
Okay, that'll be interesting. So, what I read, it said Emmanuel Macron. I don't know anything about his policies or whatnot. I know these central bankers love to print money. So, what do you see? Like, if he were to be in that role, like what's kind of his?
No. I don't see that at all. I haven't seen that speculation even. But no, I think they're probably, sort of having had Christine Lagarde, who is really an out-and-out French politician, I don't think they would support another one. So I think we can forget that.
Okay. Let me go ahead and scratch that off the scratch-off ticket. So thinking about the global world order since Bretton Woods. I was reading Ray Dalio's recent piece, and I just want to just highlight a couple dynamics from there. In his first paragraph, he says, at the Munich Security Conference, the post-1945 world order was pronounced dead by most leaders, and the picture behind it was laid out in the Security Report 2026, titled Under Destruction. More specifically, German Chancellor Friedrich Merz said the world order as it stood for decades no longer exists, and that we are in a period of great power politics. He made clear that the freedom is no longer a given in this new era. French President Emmanuel Macron echoed Merz's assessment and said that Europe's old security structures tied to the previous world order don't exist, and that Europe must prepare for war. So just curious in your perspective there. He also mentions Secretary of State Marco Rubio said that we're in a new geopolitics era because the old world is gone. So what is happening on this global scale of global order?
Well, it goes back to President Trump really insisting that Europe defend itself. You could argue that the logical conclusion of what President Trump was saying was, as far as NATO is concerned, the Europeans have got to, really stump up an awful lot more in terms of budgets and all the rest of it, and don't rely on us to protect you. In other words, don't rely on America to protect you. So they've effectively, he was saying that the Europeans need to protect themselves. So you've got a lot of political jockeying, if you like, in this new environment. That is the new environment, which I think Merz and Macron were talking about. These guys haven't got a clue. They really haven't. I mean, their approach to Russia is completely different from Trump's. Trump is trying to find a way out, if you like, of a conflict which was originally led by America, a proxy war, effectively, against Russia, using Ukraine as the base. They'd hoped to destabilize Russia. All their intelligence reports reckoned that the economy was weak and all the rest of it. And they got it entirely wrong. I mean, they really have. But then American intelligence on economics, I mean, I wouldn't give it house room. It's just appalling. I mean, they always get it wrong. Before the fall of the Berlin Wall, believe it or not, the assumption in America, and this is intelligence assumption, was that the the USSR economy was actually pretty strong. And, it wasn't. It was falling apart. Any half-decent economist could see it. But unfortunately, we don't have any even half-decent economists when it comes to Russia. Really sort of pushed on by the Baltic states and Poland in particular, and of course, Ukraine. Everybody within the European Union, and including the UK as part of NATO, was a serious player in NATO, they're suddenly finding that, they suddenly think, my God, Russia is not only going to take over Ukraine, but they're going to take us over as well. So they've got to prepare for war. I mean, they're ridiculous. They're absolutely ridiculous. They've got no idea what they're talking about. And it's, if in the earlier days, you would hear Macron actually saying some common sense about Russia. That this was not the situation, that Russia actually was trying to secure its own borders, for goodness sake. They've gone completely the other way. And you've got, this sort of groupthink going on amongst the leaders who are completely misled by, I think, their own intelligence services, and their own intelligence services in turn being misled by the politicians. I mean, it's an echo chamber. They've got no idea. It's actually quite frightening just how appalling these leaders are. I mean, they're leading us into an abyss. And I don't think that we'll have war against Russia. I mean, these people are so incompetent that they won't even be able to assemble a decent combined European force to prevent the supposed invasion from Russia. So in the sense, I'm not worried about that. It's just comic watching these clowns. They're clowns on the world stage, running around, persuading each other that they're the most wonderful saviors of Europe, and, they're on a mission and they're going to spend more on defense. I mean, you've got Starmer saying, we're going to up our defense spending. And you got the Chancellor, if you like, the lady with the purse strings, Rachel from accounts back in the UK, saying, we haven't got the money. I mean, look, this is a clown show. It really is. So I think if you want to take Europe seriously, I would persuade you to go out and have a few drinks and just have some fun with your friends and forget about Europe. They are unconsequential. I mean, they're just, it's unbelievable. They are useless, absolutely useless. Gone are the days when we actually had proper leaders who understood what they were doing. This lot have got no idea at all. And in the UK, the big joke is Keir Starmer, who every time he does something, he gets it wrong and he has to reverse. It's called U-turns over here. You know, it goes 180 degrees round because he's forced to do so. I mean, you know, he appoints this wonderful ambassador to America, Peter Mandelson, only to find that that the advice that he was given not to do so because of his contacts with Jeffrey Epstein turned out to be true.
Wow. Wow. Yeah.
I mean, honestly, I'm speechless over the whole thing. I mean, it really is impossible.
Our project is right in the southeastern corner of Wyoming. In the space of 4 years, fully engineered, fully permitted.
The ASIC is what caught my eye, $937 per ounce.
110,000 ounces per annum. First year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front-end loaded like that. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
So speaking of U-turns, there was a recent clip of Scott Bessent speaking about the competitive relationship between the United States and China. And he was not talking tough on that video. It almost seemed like he was like someone was holding him hostage to do the video, but I don't know if he was sick or what, but he was pretty much saying that, oh, we have competitive relationship and, you know, it's all good. It's friendly and everything. And so the whole tone on how the United States has approached China has done a whole U-turn based off that clip that Scott Bessent had put out. And so just curious in your perspective on China's role in this whole fiasco, because it seems like they're pulling a lot of strings and they have a lot of leverage on the world.
Well, I mean, basically China's approach has been, you know, we just do our thing. We're not going to tell other people how to run their affairs. I mean, that's their affair. We don't get involved. Now, this is completely different from the American approach. Mm-hmm. You will use our dollar. And if you don't like us, we will force regime change and we will get someone in who does like us. You know, this is the American approach. China is completely different. You know, Chinese guy turns up and says, we quite like where you are. Can we do a joint venture to build a port so that you've got better facilities for shipping ore out of your country? Of course, to us, I mean, because we will always ensure there's a good market for your ore and all the rest of it. And we will put in a railway so that you can, if you like, send it down in ore trucks and all the rest of it. You know, you can have a share in this. We'll do this in partnership. Now, this is completely different from the UK and US approach, which is basically to give these countries, particularly, you know, typically in Africa, overseas aid. And what does that mean? Overseas aid is bribing the politicians. That's actually what, you know, what it is. And even though, you know, we try and stop all this bribery and all the rest of it, I mean, the politicians are a lot wilier than that. They know how to take that aid and put it in their back pocket. And that's been our approach. And actually, politically, Africa is desperately trying to move away from that. There's a lot of corruption in Africa, don't get me wrong. Yeah. Huge corruption. But you can see the political drift, trying to get away from that. And incidentally, this is rather echoing the situation where China is actually ahead of the game because before President Xi, there was an awful lot of corruption. I mean, you know, you would get contracts on the basis of who you knew, who you were friendly with, et cetera, et cetera. And what he did was, you know, initially extremely unpopular. Basically, he did away with all that. And China now, I mean, it's just quite remarkable how their consumer technology is now streets ahead of everybody else's. You know, they've been just so successful. So when it comes to the relationship with America, America has been making all the mistakes. But there is now a change, I think, going on, Daryl, and that is that the situation in America is now so fragile in terms of the outlook for the dollar, I mean, there is absolutely no doubt that if you properly look at the US economy, it is in recession. I mean, of that, there is absolutely no doubt. When I say recession, the only thing that is holding up GDP, which is a nonsense, it's only a measure of the amount of credit, if you like, for qualifying activities within GDP, is just credit. It doesn't tell you how that credit's being used. I mean, it can be gambled away somewhere, but it still counts as, as growth. I mean, the fact of the matter is that if you take the value of the budget deficit out of GDP, this year, last year, and the year before, America has been in recession. I mean, the private sector has been in recession. And that's the one that counts. And this is why unemployment is actually rising. But, the government controls all the statistics. And we believe what they say. I mean, they're telling lies, actually. The statistics are no guide at all. So on that basis, I mean, it is clear, I think, that the dollar is now under pressure. So we had a situation where, well, if you went back to the week after Liberation Day, April the 2nd, President Xi then actually went on the offensive, or defensive, if you like, but acted as opposed to just sort of calmly laid back. He went round the other ASEAN nations in Southeast Asia, basically talked to the leaders. I mean, he went to the main ones. He didn't go to all of them. But he talked to the leaders. Now, we don't know what the conversation was, but it was quite clear that it was all about maintaining free trade throughout the, if you like, those nations which are either dominated or have a very large element of the Chinese diaspora. And he also, and this is now actually sort of changed hugely because of the Japanese election, he also, along with Japan and South Korea, accelerated the talks towards a free trade area between those three nations. So these were positive moves for the first time by President Xi. And guess what? About a month or two later, the Shanghai Gold Exchange announced that it was opening vaults in Saudi Arabia and Hong Kong. We have seen further evidence that Hong Kong is being beefed up to be the international financial center for China, as its CIPS settlement system, the Chinese international payment system, really gets into a higher gear. And the whole concept, if you like, is that these vaults will allow, for trade settlement purposes, yuan, Chinese yuan, to be exchanged for gold. Now, what we haven't got is we haven't got a fixed gold yuan rate. But I have no doubt that what he has done is he has put in place the ability to fix the yuan to gold for international trade settlement. So, and now we have, I mean, things have been deteriorating in terms of America's finances. And obviously I don't know what the Chinese internal advice is to if you like, President Xi and his fellow senior ministers. But I would guess that they're making the assessment that the American economy is stalling, and that therefore the US is very definitely going into a debt trap, and therefore the yield on US Treasuries is going to rise materially, and therefore they should advise private sector holders, under license, of course, of US Treasury debt to reduce their positions. And guess what? That's what they did last week. So you can see that the indications coming out of China is that the Chinese now think that the dollar is on the verge of a collapse. Now, how long the collapse takes, we will see. But you can see which way this is going. And we should pay attention, if you like, to these moves because they are extremely important, particularly when you have a stock market with the S&P close to all-time records. You have bond yields tending to drift a little bit lower in this environment, etc. All these things are not looking quite so sure if you look at from China's point of view. And the other thing I would point out is if you look at commodity prices have been rising ever since COVID. And if you look at the CRB index, it's 3 times what it was at the time, which means it's risen 200%. A lot of people have noticed this, but this is actually very, very important. So, from China's point of view, America, they don't need to do anything. America is just destroying itself. But what China is now doing is it's moving into self-protection mode. It's ensuring that it doesn't fall, its currency doesn't collapse along with the dollar. And it's put the mechanisms in place to secure the value of its currency against gold.
Okay, so Alasdair, when I look at this chart, it shows me that countries are getting out of the dollar. Obviously China, I remember growing up, the word on the street was that the United States owed China a lot of money, trillions of dollars or whatever the case may be. And so this here signals that, that America does owe China money, but China has been getting out of the dollar. And, I'm wondering if this accelerates the trend of central banks buying of gold. What happens in this scenario? And then what does this mean for the U.S. if, obviously countries are getting out of our debt, getting out of our dollars, not loaning us money so that we can spend and print more money, spend and just continue to increase our deficits. And I'm kind of wondering what the Federal Reserve, what's next for them in this scenario.
Yeah, well, this is something over which they've got very little control. Per se. There is something they can do, but they won't do, and that's raise interest rates. If they raise interest rates, they'll protect the dollar. They will protect the dollar's relationship with gold, which is the important point. But they're not going to do that. Basically, we're looking at the end game for the dollar. The dollar is a fiat currency. It's not going to last very long now. So far, it's lasted, from 1971, end of Bretton Woods to today. So we're looking at nearly 55 years. That's probably about reasonably good for a fiat currency, actually, that sort of length of time. But, it's over. It's over. The key to it is to understand that gold is money and everything else is credit, okay? And that includes currencies. The thing that's amazing is that the economics profession doesn't actually understand this. They don't even understand how bank credit is created. They think it's sort of, some sort of, reserve multiplier, whatever, but, which isn't. It's not that at all. That's a separate topic. The point is they don't understand what the hell is going on. Everybody in Asia does understand, and they know what's happening to the fiat currency. They're getting out of it, and the way you get out of it is to sell it for real money, which of course is gold. And you don't just look at the reserves on PBOC's balance sheet, because not all this gold goes there. In fact, I think a very small portion of it goes onto the PBOC's balance sheet. The rest of it, we know, is spread around various parts of the Chinese government, whether it's the People's Liberation Army or the youth wing of the Communist Party or whatever. It's all hidden in there. Call it some sort of huge, great wealth fund, if you like. And not only that, but increasingly individuals in Asia understand what's happening. And so they're getting out of, their own currency, in a sense, into gold and also silver. And this is creating if you like, a bit of a crisis for Western capital markets. On top of that, when you got the BRICS Forum and you got the Shanghai Cooperation Organization and all the rest of it, there are obviously discussions, if you like, particularly in the sort of sidelines between the heads of central banks and so on, about the future role of gold for BRICS and also for the Shanghai Cooperation Organization. Now, that explains why quite a lot of countries, places like Africa, for example, are accumulating gold. They're trying to get away from holding fiat currencies, and particularly dollars. And this is why it's quite clear that the endgame, as far as the dollar is concerned, will see it collapse. And the Chinese, meanwhile, will put their yuan, their fiat yuan, onto a gold standard, so it becomes a gold substitute. I mean, the only question we don't know the answer to is how long will this process take? Well, the fact that China is now turning around and has very publicly told its investing institutions, who under license, because they have to be licensed by the PBOC to buy foreign bonds. Under license, they have been told, reduce your positions. We should listen too. Mm-hmm. So, and I mean, there's President Trump was also upset Europeans with his, if you like, his policy towards Greenland. Where he's backed off that now. I mean, that was crazy. You've also got oil. We're beginning to see oil perk up. I don't know if you noticed, but oil this morning, having been as low as 55, we're now looking, 64 and change? So $64 for WTI. I think that's probably going to go a lot higher. I think President Trump will back out of doing something against Iran. So I don't think they'll close the Straits of Hormuz, because undoubtedly, if America attacked Iran, they would close the Straits of Hormuz. And I think Goldman Sachs reckoned that the price of oil would go to $300 a barrel. I don't think that's going to happen. But you can see that with a weakening dollar, all commodity prices are rising. It's not so much that the commodity prices are rising. Mm-hmm. It's a combination of two things. Firstly, is the dollar going down? And secondly, the consequences of a fiat dollar for all these years has basically suppressed the value of commodities. So what we are seeing is the beginning of a huge shift in terms of commodity pricing. And the thing that amazes me is that very few investment analysts seem to think that inflation is no longer a main problem. They seem to think that interest rates can go lower. What are they looking for? 2 further cuts by the Fed in 2026? Come on. We're going to have commodity prices soaring. What's that going to do to inflation? It will soar, even at the consumer level. So, this is all very bad news. Yeah, definitely. Even we can look at the decade of the 70s, commodity prices were soaring. Then inflation was rampant, very rampant. So currency devaluation. So we're at this point of the cycle where the monetary orders are breaking down. Countries are getting out of the dollar. They're selling treasuries, buying gold, and the United States debt and deficits are blown out the water, right? Because some people may think that the Fed can raise rates and such, and they try to compare this time to the 80s, and it's like, no, our debt to GDP is way more, a lot higher, significantly higher than 1980. Yeah. And so that means that obviously the Fed has to come in and print, and so Trump's wanting lower interest rates. They've already pivoted on the quantitative tightening and such, and you mentioned that the only question that we don't know is how long will this take? I mean, because I think of all the conversations I've had with experts such as yourself, and many people were saying, like,
yeah, we thought that, when the U.S. would print, 100 billion, that was significant, right? And then now we're seeing the trillions, right? And so I'm just curious on this aspect of currency devaluation. On a historical level, how bad could this get? Is this like a Weimar Germany type situation, or just curious in what you think?
Well, yes, I think it is. I think it is as bad as that. And the reason I say this is that the whole thing is actually driven by politics, not a sense of preserving the purchasing power of the currency, not a sense of understanding the economics, not understanding the relationship between the expansion of credit and its value, not understanding that the value of fiat currency depends in large part on the faith of its users in its value. Who cares about that? It's politics. It's politics, politics, politics. I mean, the fascinating thing, going back to the hyperinflation in Germany back in the early 20s, is that the finance minister was a chap called Karl Rhetoric, if I've said that correctly, who was there the whole time over the collapse of the currency. He was also a finance minister during the First World War. So he oversaw the destruction of the Reichsmark, if you like. Now, this was a man who was a renowned economist and who wrote a book on economics which had the same status, if you like, as books written at that time by Keynes. I mean, would you believe it? Furthermore, not only did this economic expert oversee the destruction of the Reichsmark, but he also was the architect of the mark that replaced it and, appointed Helmut Schacht as head of the Bundesbank to, ensure that there was no, if you like, unwarranted credit expansion. So, but the point I'm trying to make is that even when you've got an expert who understands what's happening to the value of the currency in political charge, then still the politics determines the outcome, not any sort of sense of the economic conditions that are deteriorating the purchasing power of the currency. So it doesn't matter who's in charge. That's the way it's going.
Wow.
And it's going to collapse. I mean, you can see how this is going to happen, Daryl, because the first thing that's happening, and we're beginning to see this with, the Chinese saying, our institutions should sell their holdings of U.S. treasuries or, halve them or whatever because they're too risky, whatever the story is. At the same time, you can see there's a growing reluctance amongst other foreign holders of U.S. treasuries to add to their positions. You've got the situation with Japan, where bond yields are rising, particularly if you go way out along the yield curve. That makes it less attractive for U.S. insurance companies and pension funds to export their savings into other bond markets. So you've got this sort of, is beginning to sort of fall off the edge of a cliff. Now, inevitably what happens, therefore, is that bond yields start rising. You then look at the relationship between bond yields and equity markets. And I can tell you that on any historic basis, they are so stretched. We have never seen it this stretched ever before. And I think that also includes the situation in September 1929, just before the Wall Street crash. So when we get rising bond yields at the long end of the Treasury market, what you're going to see is you're going to see an equity market crash, which will be at least on the scale, in real terms anyway, of the 1929 to 1932 bear market. Wow. An additional problem in this is that something like 10 trillion has got to be refinanced by the US Treasury. which means that, foreigners are going to be asked, do you mind awfully if we roll over your obligation into another obligation? Well, this is a bit difficult. So, and on top of that 10 trillion, you've also got about 3 trillion of further financing. So, this is getting into I think a time when the whole situation is becoming extremely unstable, leading to, if you like, the beginning of the end for the dollar. And of course, this is what the gold price has been telling us. I mean, the reason that the gold price has shot up, if you like, is it has anticipated to a degree the further decline in the dollar's purchasing power. So, that's put it all together, and there's only one thing that's going to happen. But also it's going to be the end of derivative markets, because they all depend, almost all depend on, for their life, if you like, on a fiat dollar. This is a real crisis. And of course, there's only 2 ways out of this crisis. The first is for America to default, full stop. Or the other way out of it is to do a soft default, if you like, to collapse the value of the currency in which all the debts are denominated. It's inevitable. And this is why going back to why the politics come into it. Can you imagine, as things, you get a real bear market developing in US equities, you've got a funding problem in US treasuries. Putting all this together, can you imagine the Fed not doing massive QE to try and stabilize everything? If you can imagine that, then, please tell me. I can't see it. I really can't see it.
That's really, that's really important. All 3 of those dynamics are like huge. And so I'm actually reading the book, The Triumph of Politics, by David Stockman, who was the director of Office of Management Budget under Reagan. And he talks about how, when he came in and he wanted to shrink, the welfare state, because they did the Kemp-Roth tax cuts, right? And he's like, okay, well, we need to shrink how much we're spending. And the politicians were like, no, that's political suicide. Like we can't, And so I've actually been listening to a lot of Ludwig von Mises, and he talks about how these politicians have to serve their constituencies, and that ultimately means printing more money. And so I've been getting more into the Austrian economic side of things, and I'm seeing how all of this is connected. So the politics is a huge part of this. Also, you mentioned when bond yields rise and like pretty much, these corporations and such, they're all like using this credit system, and credit and money are 2 different things, right? And so you have to typically sell the credit or whatnot to get the money. And so, and at some point, like it's almost like musical chairs where, there's not enough money going around to service to service all of the debt and all of the credit, and so that continues to add to the problem. And then we have like QE with the Fed, and because if bond yields rise and we get a major market crash, the Fed is going to have to like print to try to keep up, prop up markets or service the you mentioned a soft default, which would be like devaluing the currency and such. And so major issues, man. I don't see how we get out of this.
No, and exactly. It's a political problem, it doesn't. Jay Powell has done a very, very good job, if you like, of resisting political pressure and all the rest of it. But when push comes to shove, if the question is, will you save the system? The answer is yes. Do whatever I can to save the system. Doesn't matter who is in charge of the Fed. So, yeah, that's going to happen. And I can see this happening quite soon. And I think to see China begin to accelerate its backing out of, the dollar and trying to protect itself. And I think also actually having played quite a part in ensuring that the price of gold measured in these currencies and in dollars, euros, whatever, has been rising, and also silver, and is also hanging on to rare earths and other critical minerals. I think that's another indication that there's been a big policy change. So, because I mean, silver is I think very much an indication, if you like, of the change of policy. Because before around about September last year, for decades, China had used its power in the silver market to ensure that the price remained low. Didn't necessarily pin it to a particular value, but bear in mind that China not only is now the second largest nation by silver mine output, but also imports silver doré from particularly places like Chile, also imports other non-ferrous ores which contain silver as a byproduct. And remember that of mine production, something like 60% of silver mine production actually comes as a byproduct of other non-ferrous ores. I mean, basically, they are the largest holders, quietly. I mean, you won't get any statistics, but it is absolutely clear. They have accumulated huge quantities of silver, and instead of feeding it out into the market in order to suppress prices, from September last year, they decided that's it. They announced that there was a new licensing arrangement from the beginning of this year for silver exports. And it was clear from the statement that this was, if you like, a bit of a sop in the way that it's sort of saying, no, we're not going to stop exports, but we're just going to look at them a bit more closely. And we're just going to let, a few big, I think it's something like 40 licenses were granted to existing large exporters. So this wasn't really a clampdown on silver exports, if you see, but my goodness, it is. Of that, there is absolutely no doubt. And also bear in mind that household savings in China run at something like 30 to 35% of GDP. So we're talking about something like $5 trillion of household savings accumulating every year. A lot of that is now going into gold and silver alongside bank accounts. Now, we don't see where that gold is because that gold is stored in the Shanghai Gold Exchange vaults. And it's not necessarily reported. I mean, who trusts government reports? But you can see that the banks in China have been accumulating gold on behalf of their depositors and look like doing it at an accelerating pace. So, yeah, I mean, in that sense, I think China is now more proactively destroying the dollar than it was. The rationale is to protect itself, always. It doesn't appear to be destroying the dollar. The Americans are doing a good job of that themselves. But this is the moment when China is beginning to protect itself, protect its yuan. We should take that as an indication that the collapse of the dollar is accelerating from now.
Yeah. Wow. Yeah, that's definitely something we can't reverse. There's no aces up President Trump's sleeve. I mean, it seems like he's tried a lot of things. I mean, the tariffs are going to be ruled on here soon and such, and so it seems like he's running out of options and such. And when we've talked before, I mean, you've encouraged the audience, like, you want to get out of fiat and buy gold, get real money, exchange that for real money, because this is going to continue to spiral downward. Yeah,
and I would add to that, it's human nature to look at the price of gold and say, oh, it's gone up so much, and I think I probably missed it, or I'll wait for it to come back again because it's now in a consolidation phase. They're looking at it the wrong way around. If you do that, it's completely wrong. What you should look at is what is actually happening, not to gold, but to the dollar in which you're pricing it. If you think the value of the dollar is going to rally, then don't buy gold. If, on the other hand, you can see that the outlook for the dollar is for it to lose purchasing power, then sell the dollar. What do you buy? Well, one of the things you buy is real money. I'm sure there are other things you can buy. I mean, the commodity complex as a whole is now rising because it has been suppressed. As I said earlier on, the CRB index from 2020 has increased by 200%. That's, I think, the start of it. If you look at the value of base metals priced in gold, while they've risen in dollar terms, I mean, a basket of these base metals priced in gold is now at roughly 16%, 16 to 20% of where it has been, if you like, in terms of its long-term value relationship. So these base metals are very, very underpriced, even in gold, which is real money and which, as I said earlier, holds its purchasing power throughout long periods of time. I mean, there's some fluctuation, but a lot of the fluctuation is brought about by, if you like, the relationship with fiat currencies and the way in which governments with fiat currencies try and suppress the price of gold and try and suppress the price of other things, particularly commodities. So you can see that even priced in gold, you can see a basket of base metal values increasing, let us say, over the next 3-4 years, at least doubling, possibly tripling, even possibly quadrupling. And that is before we look at the relationship between gold and your fiat currency. If your fiat currency goes down, you could see these things going up a lot further. And we can take it even further than that. Unless you can see that the politics will allow whoever is in charge, if you like, in America, Trump, Scott Bessent, I don't know, next, whatever, to actually address this problem, then basically you're going to find that all these things go to infinity priced in dollars simply because the dollar collapses to zero. That's what happened back in 1923, November 23 in Germany. And there's no reason to expect it to be any different for the whole of the fiat currency system now. I mean, we had in the 1920s, it was a European problem because you had the German Reichsmark, you had the Austrian shilling, or crown actually in those days. There was the Hungarian currency, I can't remember what it was at the time, and also there was the Russian chauvinets, which all those, suffered a hyperinflation at that time. But it was a European thing. It was European because these countries had gone off the gold standard, effectively, and destroyed their currencies over the course of the war and following. So, but this time, it's the mighty dollar, which is the standard for all the other currencies. It's the king rat of currencies. And the only ones that are going to escape are the ones who are perspicacious enough to protect their currencies by making them exchangeable, at least in terms of trade. Let's say a new Bretton Woods Mark II, if you like, tie it to the value of gold in terms of trade. They will escape that fate. And so it's ultimately going to be the West's destruction, I think, while the Asian powers continue to rise. Asian powers led by China. India's rapidly trying to acquire gold. Her citizens have got gold, but she hasn't got enough gold, if you like, to protect her currency. But there are ways in which she can deal with that. And if they want to know how to do it, I'd be very happy to advise them.
Yeah, for sure. Well, Alasdair, appreciate this very thoughtful and just intellectual conversation and such. Where can the audience connect with you? I know you're publishing on Substack and such. Where can the audience connect with you?
Yeah, MacLeodfinance.com will take you to my Substack, and basically my mission, if you like. I know it's sort of rather a bad way of putting it, my mission. But what I'm trying to do is to try and let as many people as possible, which, through your interview, even is a great help, to inform them about the dangers which they face to their wealth. There's no longer a time of trying to accumulate wealth. It's time to protect what you've got. And if you can only do that if you understand what you're doing in this new environment. So that's my mission. Sorry about the word.
No. That's an important mission.
It's something which I think is desperately important, because we've got to protect ourselves, we've got to protect our families, and also we're in communities, and we're going to see a lot of our friends really suffering because they don't necessarily buy into what history tells us, what economics tells us, and an understanding the difference between money and credit. It's credit that's going down the Swanee, not money. That doesn't. Credit, that's the danger. Get out of credit.
Yeah, for sure. Well, thank you for those words and everything. You all have the information, MacLeodfinance.com, to check out Alasdair's Substack. Be sure to hit the subscribe button. Love to have your support. And thank you for watching.